Welcome to the Great Homeowners Real Estate Market Trends for March. I'm John Demery. This information is taken from RE Colorado. It's the Metro Denver MLS provider, and it has statistics from February's market activity. These stats are from the 11 counties that make up the greater Metro Denver area. Getting into it, the number of closed properties at 2694 was 10% lower than February last year. This is up 18% from January's numbers, which means that the market started to wake up from the time off during the holidays. Looking at the single family detached versus condos, townhomes numbers month over month, the detached numbers outperformed with about 19% growth versus 10% for the attached housing numbers. This would also point to a changing market, though, with the single family detached housing leading the way. The median close price was $599,000. While the MLS didn't separate out the median prices for attached versus detached sales, this is a large jump month over month, so we can assume that both products performed well. The combined number is 4% higher year over year, and it's also 4% higher from January's numbers. Now keep in mind that all statistics that analyzed closed numbers, units sold as well as closed prices, are a reflection of the activity from the month before. So while these stats are for February's activity as a whole, the closed numbers reflect the activity of properties that went under contract in January and possibly early February. There were 4,941 properties added to the market in February. This was 16% more than the previous year, and it was 14% more than January's numbers. While these numbers were significantly higher than the previous year, looking at March of 2024, they are almost identical. I think that this chart shows us that the market is picking up steam a month ahead of time as compared to last year. While the closed numbers trail the market by about a month, the pending listings number is the most current indicator of how active our market is at a given time. In February, there were 3,529 properties to go under contract. This is a 10% jump from February 2024, and it is 23% higher than January. With the big surge in properties coming on the market this past month, January, it's nice to see the buyers are actively buying the inventory with this 23% increase. This metric shows the number of days a property stays on the market before going under contract. At 33 days, this was 8 days longer than last February. More importantly, though, it is a 14-day decrease from January statistics. Last month had a surge of homes coming onto the market, and that caused an increase in the days on the market. But the influx of buyers in February has dropped that number considerably. The $500,000 to $600,000 price range was the most active in February, both for properties that closed as well as properties that came on the market. This has remained true month over month. Now, we may see this migrate a little bit to the $600,000 to $700,000 price point in the next 2 to 3 months if the prices continue to go up. Now, while last month we did see some variation in terms of the days on the market for different price points, this month is uniformly lower, indicating that all but the highest price points have seen a faster market. Standing inventory, which is the number of active listings for sale at the time that the data was pulled, was at 8,277 homes. This is a 20% jump from last February. And if you remember from last month, January had 7,469 homes in inventory, so the current inventory increased by 10% month over month. The gross sales volume was 7% lower than last year, and that coincides with the 10% decrease in closed numbers year over year. So, what do these numbers mean? For the last 2 months, I believed we were in a neutral market, not really a seller's market nor a buyer's market, but there were signs of a modest improvement in our market. This month, what have we seen? More homes coming on the market, an increase in sold properties as compared to January's numbers, a 4% increase in the median sales price year over year as well as month over month, an increase in pending listings month over month as well as year over year, and a 14-day reduction in days on the market month over month as compared to January. So this all points to a market change, becoming a seller's market. While last month's stats looked like a neutral market, February's stats have improved. And based on what I'm seeing in the market for March, we're going to see this trend continue and a more robust seller's market will continue for the springtime. This means more homes will have competing buyers and prices will go up some. Anyway, thanks for your time. As always, reach out to me with any specific questions as I'm always happy to talk real estate with you. Take care.